All right, so a very good evening. We are on the 29th of August 2019, Thursday evening, 8:30 p.m. as always. We are on the last mentorship live session for this month. And as always, we talk about our market view, which is the Nifty index view, followed by your doubts and questions that comes out of the trades that you've done over the last 1 week. So without much wasting time, let's straight away go to the Nifty daily chart. These channels, or should I start with the weekly chart? That will be a better option. This is the weekly chart of Nifty, and by now you should be familiar with these channels that I had drawn a month back. I'll repeat that these channels may look like price channels, but these points are derived from the relative strength index. So the market is within this blue channel, the rising channel, though it broke for just a week below and then bounced back. We'll come to this point a little later. And the levels that we were looking for a month's time is 10,800, 10,400, and the psychological 10,000. Extending from where we left in our last class or last live session, which was last Thursday, it was this red bar, if I'm not mistaken, the 22nd of August. And this day we discussed that if this is a trap, then within the next few days, the market will bounce back. And if it bounces back and closes above 10,800, then this is high probability a trap. We've seen exactly that same thing happening. Friday, the market opened lower, but it bounced back. Monday, Tuesday, Wednesday, Thursday. Monday was a pretty sharp move. Tuesday gap up, but it couldn't sustain. Then we have 2 days of short-term correction on Wednesday and today, Thursday. Interesting facts is that we continue to receive resistance from the same zone that we had received earlier, your 11,000, 11,200 zone. Remember this gray rectangular zone of resistance that we had drawn a couple of weeks back? This is playing out on the upside. So we will keep an eye on this on the upside. But few important facts. One, Nifty has bounced back inside our rising blue channel. So this seems to be a trap. Number two, thanks to this recent 2-day correction, we now have another channel that we have managed to draw. And again, this channel comes from our relative strength index. This is the upper border, this is the lower border. I find the upper border to be more meaningful than the lower border right now because it has multiple touches. So for the bulls, or from the positive aspect of the market, once we have a breakout of this green channel on the upside, I think this level of close to that 10,634, etc., will be forgotten for a long period of time. Probably for the rest of the year, maybe possible. But it's too soon to comment that big. However, on the downside, if this 2-day sell-off continues and we slip below the blue channel, then it is the green channel which is going to act as your immediate resistance and support. Number one. Number two, if it slips below the blue channel and then you're heading towards back to that 10,800, back to these lows, then this trap, which seems to be a trap, may not be as effective as we would have liked it to be, or is not effective as we thought it will be. These are all anticipation based on our chart readings and our experience. So we are open to any possible outcome. But as of now, I think what we discussed in our last Thursday's mentorship live class, this is a trap. It's been proven that it's a trap. And I think the big thrust will come once 11,150, 11,200 is taken out. Once it takes it out, this green channel will be broken on the upside. This rectangular gray resistance zone will be broken on the upside. and we might have a pretty good recovery going forward. The other side of the coin is if it slips below the blue channel, we're heading towards the lower border of the green, then we are again back to the levels of downsides. That time, if that happens, we will be looking for 10,400. I don't expect that support from 10,600, 650 will come in, because in that case, I think 10,400 will be the next level to watch for. Quick look at the 75-minute, the one time frame lowered from the daily. This is how the green channel looks like. We have clean resistances on the upside, and we would keep a watch how the market plays out. But to wrap it up in terms of our views, we still believe that this is a trap, and our belief will be confirmed once 11,200, 150, 200 zone is broken on the upside. If it slips below 10,800, then we again start to look at lower levels. So that's what we feel about the Nifty in terms of our indicators. What we see over here is the PCD behavior stays, which is a good and a bad thing both, because this PCD has led to the bounce back. That's good. The RSI has been staying above its oversold zone, which is also good. But we also know that thanks to this bounce back, we have an NHD, which leads to this channel. Now, because we have a negative hidden, which we call an NHD, it's a sign, it's a confirmation that the markets are still weak. So we are kind of sandwiched, right? And I always believe, and I always feel that the hidden divergences are far more stronger than the classical. So let's see, we have a classic trap situation, we have an NHD. So tricky markets, volatile markets, and we leave it to the price to give us the direction in which we will be trading. But as of now, market seems to be range bound. Trade small, trade quick, keep your bet size small, keep the risk within your appetite, and wait for this storm, this volatility to pass. Once it passes, it will pick up direction either on the upside or on the downside, and then you will start to get good, clean swing trading opportunities. But till then, this is the time where we trade less and we observe more, right? So with that, we wrap up today's Nifty view. It was short, sweet, and now I will take up each and every doubt of yours. Before that, the new trading platform, which I'm excited about to show it to you. Let's start the class first with the software and then your doubts.